Hey everybody, I just thought I would go through my watch list of 16 indexes. I'll just go through them in alphabetical order and share a few words about each one. I'll mention as an aside that we're of course continuing to focus mainly on slope rules, and the pace of change is going to remain rather dramatic. Slope rules 1 week from now will probably hardly bear any resemblance to the one you know right at this moment, or at least it'll be a lot more useful. So experiment with it, play with it, get used to it. I think you're going to see it just really improve by leaps and bounds, as the cliche goes. As far as the wonderful world of equities goes, the awfulness for bears continues. I believe the market's been up, the Dow's been up 6 weeks in a row now. Certainly 5, maybe 6. I think it's 6. And even though Amazon got creamed on Friday, market didn't care that much. The ES managed to close green. A lot of indexes closed green. Even the NASDAQ wasn't down that much. So let's just thumb through these and just I'll share a few words about each. The Dow Jones Composite. Here's the very long-term picture. And the reversal that we've seen, I keep hoping that we'll have a repeat of something that we saw here, because this has been an important reversal. However, it is entirely possible that we'll get another situation kind of like this, which was a very clean reversal, and it said screw you and just went higher. The difference, I will say, between what took place and terminated in January 2016 and what's going on in place now is that at least the trend line managed to break, and it just seems a more severe, longer paced downturn. But having said that, I've been nothing but shocked for much of the past 10 years, and so I assume nothing. As I sit here now, it still seems unlikely that we'll have new lifetime highs, but I've said that before, and as long as the Fed keeps making up dollars and printing out trillions of dollars, who's to say just how high things could go. Things took the worst damage when we started across these kinds of lines here. Until around, when was this? Until, about the third week in January. Things still looked like your straight up run-of-the-mill dead cat bounce. Since then, it's been something different. It's been too strong to write it off as just a dead cat bounce. We still have our lower highs in place. That is the last good thing the bears can say about this market. But it has been far more powerful a retrace. We're not talking 50% retracements. Now we're at more of the 62% level. So that's the comp. We've got a broken trend line, a broken long-term trend line in our favor, and lower highs in our favor, and that's about it. As far as the comp Q, NASDAQ, it did close, and again, the market clearly wants to go higher. If Amazon loses $100 in a day, and the NASDAQ's down 0.24%, that's not that impressive. Because if you remember how the bear market in 2000 started, it took one company, Microsoft, to issue a so-so earnings report, and that was the beginning of the end. The NASDAQ lost hundreds of points that day. I remember it so well. I think it lost like something incredible, like 800 points. Huge amount of its value. Like it was just a wipeout. Didn't happen that way today. Amazon got wrecked, and the rest of the market, at worst, tiptoed down a tiny bit, like this one. We do also have on this one the broken trend line, as before, and although they matter less and less these days, the horizontal I've got on this one is around 73.32. But what I'm watching at this point and is threatened next week is the most recent lower highs. And I will say, and believe me, the other indexes will go faster than this. I'm just kind of preambling along the way here. I will say that, and I said this on my Tasty Trade show, what the bears need is for some big splashy China trade news. That's the last piece of great news that needs to get dealt with. to fully price in whatever the market needs to price in. I am short, but I am a nervous bear because it would take one big reveal on the part of China and the U.S. to send the Dow up, 900 points in a day. So that is the big risk. I would actually prefer some big splashy good news instead of we're not talking anymore. Screw those guys. Honestly, I just would really prefer the good news to get out and be done with, as opposed to this waiting game. But we continue to wait. There's a month left on this ostensible deadline. Gold bugs. Gold and miners have been doing quite well. It's going to get a lot harder, though. There's a very formidable line looming, that blue line right there, and of course a lot more overhead supply. So I really don't expect gold or the miners to really make much more headway from here, or silver for that matter. Let's see what else we got here. Indu. Indu obviously is going to be very similar to the Dow comp. I'll mention just quickly that we did a bit of damage down here on the 24th and the 26th, but what I'm watching with great interest is this trend line, because we have gone up thousands and thousands of points, and we are just kissing the underside of this line. This is not a great line, I know that. I'm usually very proud of my trend lines. This is just kind of a sloppily drawn one, and it doesn't mean much at this point. What means a lot are these lower highs, and that's about it. NDX, this one, again, with Amazon's wipeout, not a big deal, 0.45% drop. This is more bearish looking, certainly, than the likes of the Indu. Its topping pattern is still quite nicely intact. We are right at the broken trend line, as opposed to floating miles above it. So that looks much more vulnerable. And what might help, although I don't count on Google to move much of anything, will be Google, aka Alphabet. Monday after the close, they report. And I think that's the last sort of super giant company that's going to be reporting in the tech world. I may not do I don't want this to run over 10 minutes, so I may not do all 16 of these. I'll just kind of hop over to some particularly interesting ones. Here's the Russell. Also not terrible looking from the bear side. The trend line is broken, and the lower highs are still in place. And of course, this one tumbled really hard during the throes of the weakness we saw last quarter. The S&P, of course, is super important and a very interesting chart. I've mentioned many times the 2800 kind of zone that's so important on the ES, and that zone is shared here on the cash market around 2816. Those were the kinds of peaks that we saw and we last saw after the G20 trade truce. Gosh, it would be nice not to get that high again, but there's a risk. We have about 100 points, I would say, of upside risk to the bears, and again, really would not want to endure that, but I don't have much say in such matters. In addition, very importantly, you'll note this green trend line here, broken with quite a lot of gusto. We are coming closer and closer to it. If I were to make a projection about some big splashy news, I would think / hope that it would get right about 2770, 2780, which would put it in the vicinity of these three peaks and put us right at the underbelly of that trend line. What else? Just do another one or two items here. Transports were strong. They pushed higher than I imagined they would. I'm leaving this for now. That was sort of our nice clean horizontal before, but we've exceeded that by hundreds of points at this time. And the VIX, and we'll close with the VIX because it's quite telling, got completely smushed. We're down to just about the lowest level that I am hoping we see during this counter trend. We've met it again and again around 16 or so. 15.94 is where I've got that anchored. And this is the third time that we've tumbled down to that level, and hopefully we'll reverse. Too many hopefullys in this video, I know, but there we have it. I hope you get some insights out of that, and thank you very much.